Investors sold big on Tuesday and Wednesday as prices rose, but began to buy again yesterday. So what's driving those actions? Gemma Dale from nabtrade joins us to tell us more. Gemma, welcome back to Ausbiz. I think we can't go past starting with financials. It's been all about the banks this week. Who's buying them, and is there strong momentum behind it, or is it a rally that looks like it might have seen its best glory days already?
So you're absolutely right. It was all about financials with our investors this week. Interestingly enough, from the data you were just presenting, or the story you were just presenting, Fortescue was our most bought stock last week. So it was absolutely top of the pile. The iron ore rally was terribly interesting to a lot of our investors. And Fortescue's not as widely held as you might imagine, so they're much more likely to hold BHP or Rio. Fortescue's sort of been sitting in there as one that they're interested in. So when that story was popular, we saw a lot of buying. Those who held it were taking profits, which is pretty consistent with how our investors respond to big news. So they'll be following that pretty closely, the people who were busy last week. The investors who were really busy this week were those who were holding banks, which is pretty much our entire investor base.
Sure.
That's everyone. And they saw this week as the most extraordinary opportunity to take profits. So we saw incredibly aggressive selling in banks, particularly Tuesday and Wednesday. So we were seeing 5% uplift in the financials index and 3% again. So we saw all of this profit taking. The bit that was quite surprising is yesterday we saw a bit of a shift back to the buys. Prices were still rising. Some of our investors, and they were smaller, so we saw a lot of smaller trade sizes coming in on the buys after most of our bigger investors had taken their profits earlier in the week. Some smaller investors coming through going, do you know what, this might well keep going. And I'm getting an opportunity to still buy banks at 30 or 40% discounts on what I would have paid in February, certainly what I would have paid 5 years ago. So I'm quite happy to pick those up, even if there's some pressure on dividends and maybe the outlook is not as great as it might have been, but looking more promising than we thought.
Very interesting that, of course, we saw the banks have rallied, the past 3 days, apart from today, of course. So that despite bigger selling occurring from like the bigger investors over that time, we're still seeing prices going up. So that sort of leaves us being people who will say potentially that it's been offshore investors like moving into the banks. So that maybe fits with that. One of the other trades that obviously has been taking place this week to fund that buying into the banks has been CSL. CSL's obviously had quite a switch up. What have you been seeing from the NAB clients?
So CSL is a really interesting stock for us. It's only held by 10% of the base, which for something that has performed so incredibly strongly after so long, we're talking a couple of decades of exceptional performance. It's such an iconic Australian company now. It's such a world leader in its field, and yet 10% of our investors hold it. It's a tiny number. They, however, hold a much higher proportion than any other stock. So they hold around $150,000 each of CSL. Every other stock holding is like 30 or 40 grand. So this average holding is really high. They love it when it comes off. So they were buying, it was a 98% buy.
98%. Wow.
So very, very aggressive buying when it comes off a little bit. You're obviously getting it at a massive discount to several weeks ago, but it was still $200 at the beginning of last year, so it's not cheap compared to a year and a half ago, but it's performing very well compared to perhaps some industries that are under a bit more pressure than it might be. And for those investors who love it, they will buy it when they can get it a bit cheaper. They don't consider it to be anything that they ever want to let go.
Gemma, for your point about it being more small buys than big buys this week, more institutional selling, how much of that was driven by month end, do you think, and a bit of rebalancing taking place rather than a wish to move away from certain sectors or companies?
It's really hard to tell. So we don't have a large book of institutional investors. It's mostly retail investors in our group. So when I talk large investors, they're often large individuals, private companies, trusts and self-managed super funds. So they'll be moving several $1 million at a time, but they're not likely to be someone investing on behalf of several 100,000 members, for example, like a super fund. So when we talk about large investors, they will be a very wealthy individual, a private family company, that sort of thing, and they will be moving. They're not worried about month end goes. That's not their primary driver, so they will just be rebalancing their portfolios for personal reasons rather than because they're worried about hitting that target at the end of the month relative to a benchmark, which is not something most of our investors don't benchmark themselves. So it's really interesting when you have a conversation with them. They're benchmarking to their personal financial expenses. They're benchmarking to whether or not they can meet their pension payment this month, that kind of thing. It's a really different approach to an institutional investor, and month end is just less
Much
relevant.
more modern in many ways.
Sorry?
Much more modern in many ways, index agnostic type investing.
Very agnostic indeed, absolutely. So, when they look at their portfolio, they are worried about preserving capital in a very, very different way to a fund manager. And they're not worried about peers. Peers are completely irrelevant, apart from a small number of very active traders who obviously have a peer group with whom they're very communicative and they like kind of competing with each other. But they're not publishing their figures. They're just having a little bit of fun perhaps on the side.
Okay. Despite the weakness in banks today, I know another sector that's had like a very, very strong week has been travel stocks. Reopening hopes have been left, right and centre, and they've been soaring as fast as the planes in the sky. What have you been seeing from for the client flows there?
So travel stocks have been huge for the last 2 months. It's been astonishing for us. We haven't seen travel stocks anywhere near the top 10 for many years now. Qantas is the only one that sort of occasionally pops its head up. The others are trading stocks or just less relevant to our investor base. The last couple of months, people have been very actively taking positions in them at the smaller end. So they're not very large trade sizes, but they are very, very active indeed. Webjet actually made the top 10 last week, so it was number 8. It was still a buy. We are still seeing buying this week, but they're small buys now, and they're much smaller than they were a month ago. So investors who were very, very opportunistic on travel stocks a month or two ago, they'll take a smaller piece now, a little bit of a smaller piece, because they're still thinking there's some upside, but nowhere near as much as there was when obviously things were looking deep crisis.
Well, Gemma, we always love having you on the show, and with the first week of the month next week, we'll get an insight into how people are moving that way. Gemma Dale, thank you so much for having us today. Gemma Dale from nabtrade.